just starting the. We're starting the second part.
Yeah.
We're just turning it off and turning it back on.
All right, folks. Boom. Get this up and going. All right.
Yeah, I'll keep this one up on my screen. We're gonna go inflation first, right?
Yeah. Alrighty. Inflation. Let's
In the
get this
words
market
of
watch out.
Jake, it's time for real talk.
Real talk. Real talk. Let's go.
It's real talk time.
Alrighty. So what do we got lined up tonight? What are we doing, cuz?
We're gonna start with some inflaciones. I think that's how they say it in Spanish.
Inflación, yes.
Joking.
Very nice, very nice.
Yeah, we're gonna talk some inflation.
Your English is very good looking, as you said.
Yeah, we're gonna talk about some inflation, then we'll talk about kind of the market dipping and what that means and what we're looking at. And then from there, we're trying to look at kind of our portfolios and figuring out, okay, say in a couple weeks, the market, starts to bow out after a couple percentage drop. What are we looking at as some potential buys? Or what are we going to rebalance moving forward into the second half of the year?
Yeah, I like that. All right, see if we have our folks here. Jake, you in? He dipped. All right, that's fine, that's fine.
He's in and out. Working hard for
Working it. All right, so pull up some items. Cut right to it. Inflation. How was the week on that, by the way? You just bleed money, Jake? Yeah, it did cut out. It did. We reset it so we can add real talk. Episode 1.
Episode 1, real talk.
Episode 1, real talk. So inflation. Which graph do we have up? What are we looking at here?
Where do we want to start the conversation? I know you had some graphs. Maybe we can start with the graph that I have. I'm sharing just I'll do the 25-year chart.
Yeah, I'll pull up a secondary graph right now.
It's kind of showing. I feel like I'm just bleeding money. Yeah.
I think we all are.
I'm not gonna say I told you so, but I did.
But
I've been warning y'all forever. I said end of July, everybody. We'll be careful around the end of July. Second half of July.
were we careful?
That's why I open up a bunch of shorts on the market. And so we'll see if they continue to pay off. If they move in the way I think they're going to move, I should make about 20% in the next couple of weeks. So.
Ooh.
But anyway.
Let's talk about that here in a little bit. Yeah, I want to hear about that here in a bit.
So on my chart, I'm not sure if you have the screen up yet, but
yep.
I'm just sharing maybe my stream's not updating. Maybe you gotta refresh. Oh yeah, I had to refresh. That's weird.
Match you up.
But this is just showing like this is like the 25-year chart. Actually, let's see if we can go max. Okay, this is a little bit better. So we're showing, this is just a long-term chart. I believe this is inflation. Yep, this is inflation numbers. As you can see, we're starting to push up, and so this is, I think, and we'll get into it in a second about what the market might be, what the market might try to start pricing in. But we are seeing that inflation is starting to push up to the last time we were this high was in 2007. So after basically from 2007, really since 1990, I think the Fed has been doing its best to try to keep inflation and interest rates as low as possible, just to help growth. When you really look at the U.S. economy and why it's grown so much, the two things you can look at is low inflation and low interest rates. When you have low inflation, then and more towards deflation, technology is really cheap to produce because the materials needed to produce that technology is really cheap. And then when you have real low interest rates, tech companies can borrow money at a really low rate. So that basically produces exponential growth in your economy. And so that's what the U.S. has been doing for a long time. The Fed's like, how low can we keep this? How low can we get it? But the first time, basically since 1990, or I would say 2007, when the housing market stuff happened, we're starting to get back to those levels. And so it's like, what's next, you know? And I don't know. What are your thoughts, Nate, and people in the chat? Where do you think we're headed next with inflation? But
yeah, good question. Inflation. For us, you know, we talked about the core CPI. We'll pull that up. Is that currently what you have up? It's a little.
I have.
For some reason, it's a little pixelated. Yeah.
Let me see if I can make my screen quality a little bit better.
You good? Is that the core CPI we have up?
This is inflation rate, but it's very similar. It's basically the same as CPI.
Okay, got it. Yeah,
inflation rates.
So on the right side of the panel, we do have what's driving up inflation. So for me, when I'm looking at sectors, specifically travel, in particular rental cars, consumable goods, etc., this is kind of what I'm looking at. We have 87.7%, 45.2% used cars, 45.1. I know we've been talking about this a little off and on about core CPI versus CPI and kind of how it's being weighted by virtue of the lack of goods available to folks and specifically travel picking up. So we have, you know, June, July, summer months starting to increase, folks looking to get out, people trying to buy cars, the chip shortage that we've had on vehicles. The fact that Hertz is now coming back looking to buy up vehicles doesn't help either. And I know a lot of people are getting top dollar for their vehicles that they're trying to sell either on Craigslist or even at dealers at this point. So we're seeing that driving it up. And so, yeah, I'll pause there for a second. I see you pulling some other items up for us to take a peek at.
I'm just looking through more of the expectation around inflation. But as you can see, like when we look back at February or this is like pretty substantial growth. So when we're looking at April of this year, they said inflation was at 2.6%, and in July it was 5.4%. So it doubled in 2 months. And so the question on everybody's mind, and basically inflation's been higher than the Fed has expected. Like they've under forecasted everything so far, and so the main question I think on everybody's mind is, where's inflation headed from here? You know, like, are we going to continue to go higher? Are we hitting the peak of inflation? I personally think, I mean, it's hard to tell because you don't really know how, but I still see demand pretty high. I don't see demand wavering in the short to intermediate term. And so when you really think about inflation and consumer price index, which are really closely correlated and based on how we compile the numbers as a nation, but when there's a shortage of things and there's a high demand, that basically increases that's I would say the main cause that makes inflation higher. And so in my mind, I don't see demand going anywhere. I still see people wanting to buy as many cars. I see people wanting to travel all over the place. People are driving. Obviously, you have the Delta variant that might be impacting a little bit, but as of today, people are driving more than ever again. People are flying. People are buying cars. People are eating out, so food costs go up. Like, there's a shortage and the demand isn't going anywhere. So in my opinion, you know, I think it was back in April or March, I said that I think inflation, CPI, would get somewhere between 6 and 10%. And I still believe that, you know, it's getting towards, and I think it's looking like maybe 6-7% at the max, in my opinion. I think the Delta variant eventually is going to start causing a little bit of pain in terms of demand. It's going to slow some things down a little bit, but I do think we're going to have, you know, I think we can hover around this 5 to 7 range, maybe even through the end of the year, in my opinion. What do you think, Nate? And anybody in the chat, what do you guys think? Do you think
100%
stay around for the rest of the year?
Oh yeah. I don't think it's going to be transitory. Yeah, I don't think it's going to be transitory as much as folks are anticipating it to be. It's going to last the rest of the year. I've seen reports that say 2022, 2023. But depending how they quote unquote want to taper, I'd be very curious to see how the market responds to that even. But there's such a high demand, and I'm a little worried about the Delta variant coming through. As we know, there's shortages in supply chains. We'll talk about that in a little bit with transportation. There's some articles I definitely want to reference in this regard. But yeah, I think it's going to stay for the foreseeable future, probably till the end of the year. People are going to kind of get the travel bug out of their system before we get shut down again. I'm assuming that's gonna happen at some point to some degree.
Yeah, what do you think we're like? The numbers are at about 5 point something percent. Do you think we're gonna go much higher? You think we're kind of hitting the peak? Curious to your thoughts.
Yeah. I think five's a good number. I would say good, quote unquote, given the circumstances. But I wouldn't be surprised if we went higher. I think there's a lot of speculation in the market, and we're seeing the rotation of folks looking at bonds and T-notes and some other items to put their money in. And I just heard on CNBC the other day that folks are now looking at REITs to start putting their money in because they don't know what they don't know. And the volatility, VIX, is crazy on Friday. We could pull that up in a little bit and kind of talk about the volatility in the market. You did?
Well, there's
Nice.
so the UVXY is
Right.
basically the VIX that you can trade, and so I bought some of that on before it started popping as another hedge against volatility. It's come a couple weeks, but
Yeah, pro shares, pulling that up right now. Yeah.
but yeah, I think Nate brings up great points around. We could definitely could see a little bit more inflation coming up, and this is an article I brought up that I found kind of on the point of inflation, and Janet Yellen came out this past week and said, obviously she's kind of known for being a little pessimistic, but she's saying she's expecting that the U.S. economy will see several months of rapid inflation. What that means, like, only time will tell. But so I think Yellen's really smart, even though she is a little bit bearish on things or a little bit maybe negative on things. She's a smart person, and she's had a lot of experience in the Fed and in that positions of having a lot of economic impact on how policy changes. So she definitely knows what she's talking about. And so she's saying several months, but then she says prices ultimately will fall back to normal levels, and cited markets-based inflation long-term expectations to remain in check. So she's kind of saying, I think things have got a little hotter than we thought, but eventually they'll come back. And so I think what's interesting is, and I'm curious your perspective, Nate, is how long do you think we have to see 5 to 6% DPI and inflation numbers before the Fed tapers? How do you think? Because what Powell keeps saying is it Powell? Yeah, Powell keeps saying is
Jerome Powell.
He's like, we're not going to make a decision until we know for sure what's going on. Essentially is what he's saying. And so that's why they're letting things run the course, because in their minds we're still seeing a lot of transitory inflation. So they're considering gasoline, housing prices. They don't really mention as much. They're seeing that prices are going up there, but like oil is something that they think is very transitory. And so they're kind of staying on the sidelines, say, okay, we're not going to do anything with rates yet. We're not going to do anything with tapering, and tapering just means pulling back on the amount of money that they're spending. So they're buying mortgage-backed securities and notes and things like that, like T-notes, what Nate mentioned, bonds and things like that. But I'm curious what you think.
Yeah, I'd be very keen on oil in particular. So I'm leveraging one of the stocks for oil in particular. I'm buying into because there is going to be demand. The barrels were, I don't know what they closed at this week, but at one point they were 70. They were talking about possibly them going a little higher or lower depending on OPEC and OPEC plus, and that whole snafu or debacle of not getting everybody at the table. So I think that's a huge either impediment or adding gas to the fire, depending how you look at it, so to speak. And so, I mean, you have South America countries kind of holding back. Who's willing to step forward in terms of the oil? I think that's its own issue or concern. But I'm buying into that a little bit. I think it's going to spike a little, specifically when we're talking airlines and people wanting to get out and about. But apart from that, yeah, I'd be very curious to see how Jerome Powell responds and reacts to because it's also the banks that are going to be looking at applying pressure to the feds to see where they're willing to flex a little bit. And I say flex in terms of, are they going to keep the quantitative easing? Are they going to taper off? We've seen what happened last time when they were doing quantitative easing. They satiated the demands of the banks, essentially saying, well, we'll continue as long as we can. We'll hold on to everything we bought instead of selling off. And as they marched forward, and in fact, this gal Yellen was there right after Bernanke. So it's interesting to kind of see this come back around full circle, where Yellen is kind of yelling at folks saying, hey, do this. And Jerome Powell is kind of in the driver's seat saying, no, let's take this nice and slow, kind of see where it takes us. The economy this is the epitome of capitalism. Let's see where it takes us, and we'll respond accordingly. So I think there's a very interesting dynamic between that right now and how folks are going to respond. And the market included banks, the mortgage-backed securities. What are we going to be looking at in the next year? And so I'd be very curious to see the down payments. There's a lot of buyer's remorse. I'm going to sidetrack here a little bit because I know we were talking about housing for a little bit, and it's a very important market, specifically when we're talking mortgage-backed securities. There's a lot of buyer's remorse. I'm very curious to see what the numbers are in terms of people being able to afford down payments is one thing, based on the Biden money, we'll call it, stimulus coming through. And then the reoccurring monthly costs it's going to take for people to continue owning their home. Because as appreciation occurs, property tax increases, expenses increase. Can the economy withhold and sustain that in the near term and long term? I don't know. But I know there's a lot of buyer remorse from folks, millennials in particular, that either got into quick. There's something I saw on the news, some gal bought without even doing an inspection on the house. She paid over what the asking price was, skipped the inspection just to close on the house and have it. Come to find out, she had a bunch of issues going on in the house. And said she would never recommend that. Yeah, of course not. Expletive there. Why would you? And so I can tell you from firsthand experience, just closing on a house recently on investment property, I'm glad I did the inspection. I know what I have to pay out apart from for maintenance and so forth. But I'd be very curious to see how the market responds in the next few weeks and months, and depending how FOMC and those folks decide to move forward, specifically with the Delta variant coming back. So I'll pause there.
I think you bring up good points, and just bringing up a couple more. That's the wrong page, I think, actually.
How we doing, you said? I see you.
I'm curious your guys' thoughts. Anybody in the chat? What do you guys think about inflation? Do you guys think it's headed up anywhere more? You think it's going to cool off from here?
Yeah. I'm going to bring an additional point, I think, for inflation in particular, transportation supply issues, the chain supply issues.
That screen up right now for you.
Yeah, I just popped it up. Yeah, we good. That's another one. Yeah, Levi's. So we got a couple things happening here, folks. Supply chain issues. Double. I won't say a comment there. There's a joke somewhere in there. But 40% of all containerized freight flowing from the United States arrives and departs from Los Angeles and Longport beaches and ports. So you're thinking West Coast, the other's Texas, the other's Florida, East Coast, going directly to connect to the other continents. So this is pretty interesting, just trying to figure out where things are going to be headed. And this one, this one's 2021. There's another one I'll pull up here in a bit, but just the impact that this has, it doesn't seem like a big issue, but I think we all know. Minimum wage, Jake, that's a very interesting one. We've talked about that sporadically in the last few weeks, but I'd be more than happy to run down that rabbit hole, because there is the question of, do you pay in the retail sector, and predominantly, what's the cost to have an employee? Turnover rates we know cost way more than retaining somebody. But then there's also the concept of, do you provide a bonus to somebody and minimum wage hikes, or do you pay above minimum wage hikes to get employees? So I have a hypothetical, and I'd be curious to hear your point on this in a second, and something to think about, and then I'll get back to my thing. But at what point, how much do you pay somebody? People, that's correct, Jake. That's really my point. as people are not coming back, and that once again, this is predominantly minimum wage jobs, are making more money with Biden money than they are with the actual employment being offered right now. So at what point does it flip? It's currently an employee market, meaning employees can demand what they want and still get hired. In September, or whenever we start to cut off checks, some states are already doing this. Whenever we cut off the checks, it becomes an employer market. So something to think about. I'm very curious to hear your thoughts on this deal. And anybody in chat, specifically you now, Jake, since you brought it up, once it becomes an employer's market, did the employees mess themselves over by not taking the opportunity right now to get hired? There's many, many, many employers right now hiring, giving bonuses, giving specific wage increases, a plethora of other benefits to be hired right now, but people are turning those options away. Is that a mistake from an employee side of this equation? So, and Dill has this other option up right now, other screen up. So the dive brief here, Levi Strauss, they are stressing the F out right now. Delays have been built in lead times for 20% of the products in their brand. There's so many issues right now on the supply side of things that's also driving up some of the concerns and issues that we are seeing now. So department says turnover rates are over 90% for large long haul carriers. So we're having issues just from getting product from point A to point B once it's been delivered through the cargo, through ship. And because of that, it's fucking over the market right now. And that's just on jeans. That's like basic essentials. And there is a supply or a big demand for these types of items. So when we're talking inflation, it's not just monetary or fiscal dollars that are being impacted, but we're thinking the actual supply of material goods coming into the market are being an issue, not just the demand that we have readily available. So it's pretty interesting to see the flip side of that. But American Trucking Association said projections for the industry will need to hire 1.1 million new drivers in the next decade, or an average of 110 per year, to keep pace with retirements and growing transportation needs. So this is where automated systems come into play. Tesla, batteries, lithium. I'll talk about some of my stock picks at the end of this rant of our stream here. But I'm bullish on transportation, on travel, on lithium batteries. I think that's the next big market that we're going to be looking at, and I'll talk about some of the stocks that I have currently in my portfolio and what I've been looking at. But what are your thoughts on all this, guys? I'm very curious to hear the demand side. Now that we bring in living wage, minimum wage into the equation, as well as trying to hire folks just to get 1.1 million new drivers in the next decade, the compounding issues that we're seeing here. What are your thoughts?
Yeah. I mean, I think it's definitely interesting because you have a lot of dynamics. So, as you said, like I would say there's so many industries that are experiencing shortages on employees. So like, I know the airlines are having a big issue, and they're continuing to have a big issue for pilots. Like they don't have enough pilots for flights, and so there's less flights, which makes flights more expensive. Right here with Levi's, like obviously they're having supply issues, which means that the price of jeans go up. So you're seeing a lot of issues that don't seem like they're going to be fixed very soon, which is that, when we go back to the inflation part, like that means that cost of things are going to stay up for longer than we're expecting, most likely. You think about supply issues, like supply chain things don't get worked out in a month. They don't get worked out in 2 months. These are things that can take 6 months to a year to 2 years to really figure out. They're entire systems that are going through a big shock, and that shock goes in many waves and it lasts for a really long time. And so that's why I'm like, I don't think inflation's going anywhere. I don't know how much higher it will go, but it can persist for quite a bit longer. I think the big question mark is unless they extend it again, when unemployment benefits start to wean off from the federal government. So a lot of states have already cut off, like there's some states that have kind of been getting some scrutiny lately because they are cutting off their state benefits and only giving people federal benefits, a way to save money through states, and they're getting a little backlash. But when September comes, federal benefits are being cut back to where they were prior. And so what does that mean for inflation? Say we get more pilots, we get more people working in restaurants or in clothing stores or ports, does that mean that we have this big shock where inflation can compress back to normal at a faster rate because of the supply shock of employment shrinks quickly, or unemployment shrinks quickly? And so I don't know. There's a lot of factors. I think September, October, November. I think it's going to be really interesting to see what happens once those unemployment benefits go back to where they were pre-COVID. So I don't know.
So I just pulled up.
Yeah.
I just pulled up the chart. So all the states that have cut it off, there's 26. Louisiana's the latest, cutting them off on August 3rd. So we have Alaska, Missouri, Mississippi, Iowa, Alabama. Predominantly, I'd say a lot of red states here. Obviously. And ironically, I saw a report, and I'll see if I can find it and maybe post it in our YouTube channel when we post this. But there's definitely another study that's being done in UBI, so Universal Basic Income, there's a strong push for this right now. Ironically, this is kind of the test bed for it, which we're seeing happen. So there's a report that's out that says, the folks who are continuing to receive benefits are more likely to be inclined to apply and gain jobs, and so employment. And that's the national kind of looking at this as a test bed for this. And then in California, specifically in Stockton, California, the former mayor, Michael Tubbs, who's now working with the state of California, I believe, with Newsom, is looking at providing stipends to cities to continue that work, because he has also indicated that if people are more likely to receive these benefits in the short term, in the long term, it pays off. What are your thoughts on that?
I wonder what people think in the chat. What do you guys think about UBI essentially giving people some kind of monthly benefit for living? I'm curious what people in the chat have to say. I don't know. I think it's I gotta get a new one up.
Okay, got it.
I think it's going to be a big test. Like, we don't know how people are going to respond. I think COVID was a big indicator of what could happen. And I think we're experiencing it, and we're experiencing that people are willing to make less money through some kind of government support that's going to help improve their lives. And I think areas that we've seen it is like families that maybe one parent is making a lot of money already, and so the other parent maybe doesn't work, to take care of children at the home.
Yeah, that's a good point.
I think even, I would say for lower income, like people go from 2 jobs to 1 job, things like that. So I think there's maybe some people like to take advantage of house. Yeah. And so, it's going to be, we've seen the test, and I don't think the results showed a very good outcome, because I can't blame inflation all on people not going back to work, 'cause that's not the case. There's a lot of things that happen. I worked at an e-commerce company, and a lot of companies cut back on their orders because they expected when COVID happened, people were going to stop buying, but the opposite happened. People started buying more. And so that's been this supply problem basically since the beginning of COVID that's still persisting, and in some industries getting even worse. And so I think we've seen some of the outcome, and I think it could have more negative than positive in the long term. But you really have to break it down by, I think there's too many categories to say it's bad for everybody. I think some people benefit from it more than others, and then some people change their life habits, which has a negative impact on the economy, and some people change their impacts that have a positive impact on the economy. So it's really hard to say it's good for everybody or everything, every situation. But that's just I know that was kind of a side conversation on the UBI stuff, but I think to bring it back on the point a little bit, I know, Nate, you talked about some investments that you're looking at. So with the potential like inflation persisting for a little bit, or even like say in 6 months we still have high inflation and the Fed finally decides to taper or raise interest rates, are there any trades that you're positioning yourself for those current scenarios of inflation or potential tapering and raising of interest rates?
Yeah, it's interesting. for me, as I mentioned, yeah, I'm looking at kind of a longer term. I don't really know where to put my money right now, right? That's kind of the issue that I'm looking at. I have some other real assets that I'm investing in outside of the market, but as of right now, I am looking at some transportation, looking at Ford, kind of a longer play on that, just from a vehicle standpoint and the chip demand. I've looked at some of the other chip makers and specifically for vehicles and other devices, but I haven't seen anything that really warrants me to want to hop in with both feet yet. But for me, I'm looking at a couple different tickers right now. We've been long holders of LLKKF, which is lithium.
I'll bring that one up.
And Brian, yeah, thank you. And then another one, AMSLF, and that's mining for cobalt. So really, we're thinking longer term right now because either these stocks are being overlooked. These are OTC stocks, by the way. So they're being overlooked or maybe just not heavily invested in quite yet. But I see these as kind of a longer term 2-3 year play right now, while folks are focused on other items like meme stocks, growth stocks, or some other types of value stocks. I'm kind of looking at OTC right now, putting some money into that for the time being. So there's some there that I'm looking at. Dividend stocks, definitely. I know we've talked about SDIV being one of them. That's a monthly dividend stock. That's dropped in the last few weeks, month now.
Down about $1.
Yeah, it's dropped a little bit. So I'll probably doing some
about 7% decrease over the last month.
Right.
And a half.
Yeah, and that's super dividend that we've been spying on a little bit. And then some
dividend.
REITs. Yeah, monthly dividend. And then there's some REITs that I've been looking at, specifically in New York. I have mixed feelings about this because of the market trying to come back. But I've been keeping close eyes and kind of dollar averaging cost down towards some of these items. So MORT, that's one that I've been paying close attention to, and NYMT. 1874 currently for that one. It's ebbing and flowing. Yeah, so it's ebbing and flowing just because there was a lot of speculation in the market. And these are commercial real estate predominantly, and some housing. But I've been looking at commercial, and in fact, I've been looking into predominantly manufacturing, some biotech spaces, warehouse specifically.
My screen blurry the whole time.
It's a little blurry. Yeah, maybe you can knock it down to 480. Yeah, you might be able to knock it down a little bit. It'll take a quick sec to I think get there. It's a little better. Yeah, it's a little better.
Shoot. Okay, it's a little bit better.
But yeah, I'm looking at warehousing, manufacturing facilities, industrial at this time as well, because we are looking at the Amazon effect and the whole new economy. I'm not really looking at Uber and Lyft from a gig economy. I'm looking more at the infrastructure side of where you're going to put all this stuff, and how are we going to get folks in warehousing for either drones to pick up and drop off items for people. I know Amazon's looking at 30-minute deliveries. They're going to be buying up real estate up the wazoo in the next year or two, based on their new technologies that they want to deploy. And so I've been looking at a lot of warehouses in REITs, specifically for warehouses and facilities around that. So that's kind of been my outlook for the next probably 3 to 6 months, is starting to scoop up some of those stocks as we're moving in and selling off of some other items. Jets, I'm swing trading weekly, if you will, on that, and some of the transportation. So yeah, that's kind of where I'm at. Where are you feeling? What's your ins and outs?
I honestly my screen is so blurry.
I don't know.
Maybe you can move to yours, see if yours works a little bit better.
Yeah.
Do you have a screen where you can bring yours up on the big side or no?
I can do it.
But yeah, I think so. When I'm trying to think about what the market could be headed, eventually they're going to have to taper. Eventually they're going to have to raise interest rates. And so that's why I've gotten out. I'm no longer long-term holding any of my high growth speculative names. So I've sold out of like 80% of them at this point, prior to some of the pullbacks, because I just didn't have short-term conviction on them. I'll buy them back at a cheaper price. And honestly, I think the safest there's a few safest bets. So I think one, I'm looking for, like, if we do see a market downturn, say sometime in the next year, what are stocks that I think are going to be most safe? So one stock I'm looking at is Walgreens. Say the Delta variant has, like, what are the stores that we saw stay open? The Walmarts,
Yeah, that's a good one.
Targets, the drug stores. Like, those are the things that I saw stay up. And Walgreens has kind of had a pretty massive pullback. I think my screen is still up for some reason. But
Yeah, I pulled it. Yeah, I'm leaving it up just in case.
I think they've had a pretty big pullback
Just in case you have something.
over the last few weeks. So that's one I'm keeping an eye on. They might have a bigger pullback, but if the market goes back down another 5% over the next couple of weeks, that's what I'm going to be buying into on a big dip. I'm on the same page with Nate on Jets. I'm just keeping an eye on it. I'm getting a little nervous about the D variant and what impact that might have on travel. So if there is an airline I'm going to buy, it's probably going to be Southwest at this point, because I don't think they're going to be as impacted due to when we saw COVID happen last time. There wasn't as much domestic travel that was shut off. Obviously, supply went down a lot, as not as many flights. But we didn't see, Southwest doesn't really do a lot of international flights. And so they're a little bit protected by nations shutting down between each other. And so that's what I'm looking at, just to keep an eye on, as Southwest might be pulling back a bit more. And I know people don't like to play them, but honestly, in an inflationary economy, Google, Facebook, Microsoft, and Amazon honestly do the best.
Ooh, you're going a little Fang. You're going a little Fang on us.
And the reason I say that, you can even add Netflix in there. They're adding gaming into theirs, which I think open up another I could double their business easily. Even though I think they're a little rich right now. But when I think of inflation, or I think of industries that aren't going to be as impacted by tapering or interest rates, it's companies that already make a shitload of money, and they have parts of their business that aren't impacted as much by potential shifts of the economy shutting down. And so Facebook, Amazon, Google, I've talked about this for the last few months, is they make so much money from ad revenue. And I work in digital advertising, so I know how much companies spend on advertising, especially the big guys. People aren't spending less on advertising. The cost only goes up over time. And so as people spend more on digital advertising, that means Google, Facebook, Amazon, and Microsoft are going to be making more money as companies.
Since so you know kind of the background, sorry, go ahead.
Yeah. No, go for it, Nate. What were you saying?
I was gonna say, since you know the background, kind of the formula on that, the cost per click and all that kind of stuff, are you seeing kind of that trend? Like, you obviously are talking about this pretty inflated value over time, right? I mean, how does that work? Kind of explain that. That'd be great.
Yeah. So it's really based on volume is the easiest way to put it. So basically, since I started digital advertising the last few years ago, it's called like a CPM. So whenever you see an ad on Facebook charges people based on a CPM basics. So every 1,000 clicks, or every 1,000 clicks costs X amount of dollars. And so every year since I've been in this space, it's at least gone up 30% a year, if not more. And so those costs are only expected to increase more and more every year. And so as those prices increase, literally Facebook is making hand over fist money on ads, because more people are doing it, which means there's the same amount of supply of ads to show, but there's twice as many people wanting to show ads. And so Facebook makes more money, Google makes more money, Microsoft makes more money, Amazon makes more money. And so those are honestly some of the safest long-term bets you can have in your portfolio, in my opinion. I think they're going to be as least sensitive to a lot of anything in the tech space. And
so that's interesting.
Cost is such a big part of their revenue. I think for Facebook, it was like 30 or 40% of their revenue in this last quarter. Wow. So that's a big part of their business.
It's a big number. That's like Dogecoin for Robinhood. But jokes aside, online advertising costs in 2021, I mean, 30% year over year is kind of what you're stating. So average cost per click, that's CPC, right? And the cost per, the Latin term, the M for 1,000.
I think it might be million actually. Cost per million. I don't remember. It might be cost per thousand actually. I always forget.
Yeah, cost per thousand. Yeah.
Yeah, cost per thousand.
That was in impressions. That's kind of crazy.
Yeah.
How that kind of works.
So
but do you
these
see more
numbers are
people?
only going up.
Right. Here's offline traditional.
And like
magazines.
if you're thinking about the future, right, and we're talking about this new economy, this digitalization of the world, as more and more companies are embracing e-commerce because it's cheaper for their business to operate. It's very, very expensive for someone to have a storefront. And when someone says, oh, like, here's a great example, radio, I have to pay $20 for a CPM where I can go on Facebook and get $6-7 for 1,000 impressions. Like, where are you gonna show? You know,
right.
like, oh, I can cut 30% of my business costs by just starting to do Facebook ads instead and still see as much or more revenue coming for my business. Like, these costs are only going to go up, and as the economy comes to digitalize itself, then these companies are making, if the FANGs are making more money, anything that has ad revenue and a successful platform, they're going to continue to make more and more money over time. Like, I feel like we're only in like the third inning of the digitalization of the world. Like, just wait till we're in the 8th inning and like 70% of businesses are e-commerce. Just think about how much money Google, Facebook, Microsoft, and Amazon are going to be making on ad revenue. It's going to be ridiculous numbers.
Right. Not to get too philosophical, but you brought it up. I'd be very curious. The fourth industrial revolution is kind of this new AI, Internet of Things, all of this kind of like virtual reality, augmented reality type stuff, right? Physical, digital, and really biological worlds collide. So it's pretty interesting. Looks has ties to VR. Yeah, Oculus. Facebook. Yeah, they're heavily invested in this stuff. They see that as their next big move. Yeah, definitely. And that's where it's all going to be going, right? And then you're going to be paying for in app purchases with crypto, right? That's probably going to be how it's going to be in 10, 20 years or however long it takes to adopt all that. Theoretically. Theoretically. Pretty interesting stuff.
But we went pretty deep on inflation. I think that's a good turning point to the next topic.
Yeah. Pull. I do want to bring this chart up though, because
bring it up real quick.
I'd be remiss if I didn't, because this is something that's very important. This is day by day. 2019, 2020, 2021. Yeah, just to give folks insight, as we are ramping up. Walgreens, I think, is a very good pick. I overlooked that one because I did want to pick them up, to Jake's point. I did want to pick them up earlier on because they were getting involved in the COVID vaccinations and being the site, CVS included, and Walmart for that matter, a few others. But yeah, 2021 travel, I mean, just looking comparable to 2019, off by 600,000 that day. But I mean, compared to last year, you can imagine what that revenue growth is considered for airline travel or vehicular travel, as we talked about on that. Curious to see July 4th. Oh, they got murdered, like 1.6 versus 2.7. But that was going to be supposedly one of the biggest years. They did top out here, though, on the first second. People wanted to get the F out of here and go see family and friends. So it's just something kind of interesting to point out.
Yeah, it's good data. To see how travel continues. This is something we should definitely keep an eye on for these airline investments. See how travel changes over the next couple of months.
Yeah, definitely something I've been looking at. And I believe, if I'm not mistaken, the business travel makes up like 40% of the revenue of airlines. So if offices aren't coming back, and I've heard like JP Morgan, some of these other bankers are like, I could do 4 business meetings on Zoom. I don't have to fly to 4 different cities every day. It's a new city. That's 4 days I don't have to go visit other places. So I'm curious to see how this is going to affect long term. Airlines are going to have to get creative if this is going to be the new future. So
I agree. That's the biggest reason I'm bearish on airlines. I've been talking about it for a while, but
I was bullish.
Was the biggest red flag for me.
Yeah, and I was bullish, especially for for this summer, but I think Delta's going to knock us out of the sky. Unfortunately, I don't think we're gonna get that far. But the sell-offs. Why is the market selling off? Fears around COVID variant. Pop up the our CNN article here.
Yeah,
with our friend
I'm curious
Gupta.
what you guys think in the chat. Why do you think the market's selling off?
Let's enjoy the show.
Cheers.
Oh man, where's this ad coming from?
I said one.
You
Chill.
getting
Looks like we got.
I'm sorry for the random ad. Where's that coming from? Oh.
We put
There's a CNN video. Sorry, folks. Ad revenue.
we need that ad revenue.
Yeah. So COVID vaccination rates are down. Do we think the Delta variant is having an issue on this, folks? What's the sell-off for? What are your thoughts on that? Because earnings seasons. I mean, we just had J.P. Morgan, all the big banks coming out. I haven't seen that. How did that end up? I didn't even get to check it this week. Did you have a sneak peek at the?
What is it?
The earnings reports from all the big banks and stuff. I haven't even.
Yeah, they all killed
Taking a
earnings.
peek at that.
Actually.
Okay.
Yeah, they all killed earnings, but a lot of the stocks went down, and so a lot of
Yeah.
people are a little confused by that. There's a lot of speculation around earnings. I think the biggest for basically all companies, like there's a lot of optimism around earning or companies killing earnings, but a lot of people are starting to worry that maybe we're hitting this quarter is the best quarter that we'll get moving forward. That from here, people are saying, oh, we hit deflation. We're going to hit deflation in Q3 or Q4, which would that impacts growth. And when you have less growth, companies' earnings are smaller. And so there's a lot of talk and chatter going around that maybe we're going to see the economic peak in this quarter, and that's why I think that's having a lot of impact on why maybe people are not responding to earnings that well and selling off, even though great earnings are being seen by companies. And this is how I've had to. It doesn't make much sense. But this is how I had to train my brain about looking at the stock market. Is where do I think the stock market's going to be in 6 months, and that's the investments I'm going to start making. Because think about when COVID happened, we had this big sell-off, and then obviously the federal government probably supported a little bit and helped the market go up, but people were looking a year out, and we were starting to see this demand pick up, and people are like. The big money, the hedge funds, there's like, oh my gosh, I'm getting this amazing discount, and we're expecting demand to get back to where it was a couple years ago pretty quickly. Right. And we've seen that over the last year. And so in my mind, I'm starting to think, okay, where are we going to be at 6 months from now or 12 months from now? And people are starting to feel that we're hitting peak growth right now.
And you've talked about this in several of your videos too, right? Your RSI, like what's your gut telling you? RSIs, we oversold.
Well, it's
overbuying.
It's really hard because when we look at the markets honestly have not been that great for the last 3 months. But the only companies that have really been doing amazing outside of the random ones here or there are the Apples, the Googles, the Facebooks of the world. Like
Zoom.
If you go on, like if you look at any of the stocks that did well during COVID. If you look at them now, they're down 50-60%. Like go to Zoom, yeah. They're down like 50% from their high, while Google and Facebook have been hitting new highs. And so the market hasn't been doing that well, even though the indexes are at all-time highs. Like go to any popular names from retail. Go to PLTR. PLTR is
give me one. Mark,
name.
Give me one. Guys, give us some names.
These are names that have been super popular, and they've sold off tremendously over the last few months. And so the big names that I mentioned that I think are going to continue to do well are somewhat hiding not a great market. And I've talked about this for a while on the stream.
Right.
The market's not doing as good as people think it is right now.
So this is interesting.
Your initial question, But
yeah, that's good. RSI, like relative strength index. You've been charting this out quite heavily in your videos throughout the last couple of weeks, and so we've been seeing kind of ebbing and flowing depending on industry. And feel free to pull it up. We have your mini screen up. But PLTR are pretty interesting as well. I think, so the Compound had a really good talk about this, or maybe it was the other podcast with Chamath and them. They talked about kind of this indication of folks need to be net negative in order to continue quote unquote growing in terms of the market. So when you have a negative number, instead of you come out earnings positive, it's kind of like that Pollyannish bubble's been popped and folks start looking at you as a real company. But if you're negative and you don't have earnings to show, your burn rate's really high, folks are willing to, for whatever reason, paradoxically, keep investing and throwing money at you, whether it's good money after bad money or whatever it may be, because they believe in these companies to at some point turn a profit, right? Like they're thinking they put in, even though there's no revenue coming through. I think we're starting to see a little reversal on that, to your point, right? This article right here from Yahoo Finance, revenue growth needs to accelerate for a company to turn a profit anytime soon, I think is an indicator of that. People are like, man, we can't be too bullish on these companies that may or may not work out at this point. And I think there's a trend reversal starting to happen a little bit here. Plus all the freaking IPOs that are coming out this year, like people are looking at the 600 plus, right? Like now I get to pick what I want to invest in. I don't have to invest in the 200 that are limited here this year. I have a plethora of options, plus SPACs, plus all these other alternatives. So yeah, I think that's very fair to say. 100%.
Yeah, when we talk about like inflation is, it's good for high speculative names because of growth. It's bad for them because it costs more money. Like technology costs more money when there's inflation, which means these companies are it's going to be even harder for them to grow. And so there's I think a reason why all these names have pulled back so severely is there's a lot of concern about inflation or about tapering and interest rates. And I guarantee you, as soon as the Fed says, you know what, we're tapering, and by 2022 we want to be back to this level, or 2023 we want to be back to this level in our QE, and when they say, okay, we're accelerating our interest rate plan, we're not gonna, we no longer want to be at 3% by 2025. We want to be there by 2022 or 2023. As soon as they start saying this, all these high growth names are going to get even more demolished. Yep, I think some of that expectation is already getting worked its way in, because I mentioned before, people look at what's going to happen in the next 6 to 12 months, and that's how they invest. And so people are already looking in to predict these things and the high probability that they might happen, and that's why I think you're seeing a pullback in a lot of these speculative names in the market, along with all the other things going on. Mm-hmm. But yeah, I can definitely I'll do some charting just to kind of like, okay, technically speaking, how is the market looking and where it might be headed in the near term. So I've been kind of chirping for the last, oh my gosh, my screen is so blurry, isn't it?
Yeah, it's okay.
I don't know why it's like that. Like there shouldn't be anything that's making it that blurry. I don't really have that many programs up. Is it better to keep it at 480? Can you guys see my screen or no? Let me know in the chat if you can see this or not. Because I know it doesn't look so cute for me on my end, but how does it look for you guys? It's blurry, yeah, okay. That's not going to be very helpful for you guys if you can't see what I'm doing. What source? Can't do that. We got to get this nitro on freaking.
Yeah, so there we go. Now it's good.
Is that better?
Yeah.
1 to 7.
Just takes a minute to load. That's weird. I don't know why it does that. Is
that better, guys? Maybe I should just get started while I have it.
For real.
So the SPY hasn't looked as bad as the NASDAQ, technically speaking. So when we look at RSI, there's a couple things we look at. So one is that we're still in a bullish phase as long as RSI stays above 50. Whenever RSI is above 50, we're in a bullish phase. As you can see, the correlation between going up and this staying up in this range. But as soon as we start hitting this overbought, that typically coincides with a pullback in the market. And So as you can see, after many months of kind of hovering right here and some pullbacks, we got right to the edge of overbought again. And so that was telling me, along with some other factors, that some kind of correction was happening in the market, was gonna happen in the market. And so when we look back, we haven't had more than like a 2 to 5% correction since back in, when was it? Back in September. That's the last
This
time we
face
got more
economy
than
is going to
4%
grow from
correction in
around
the market, or
$350 billion.
5%. And so that was a big thing to me, is like, okay, we're getting overbought again. That's a big deal. And we haven't had a big correction in almost a year now. We've only had these small pullbacks. And so that's why I was thinking, like, one of the many reasons I was thinking, okay, we might be headed for a little bigger pullback here in the market over the next end of July as this was getting more into that overbought range. I think the pullback in SPY probably won't be as drastic as the NASDAQ, because the NASDAQ's overbought quite a bit more. Let me get my rate indicators up here. So, get to the weekly chart. Or was it the 100-day? I gotta remember, I was charting this earlier, but I don't remember. Oh yeah, okay, so when I always look at moving averages to try to figure out where the market might be pulling back to, along with support and resistance lines. And so, it's blurry again. Is it blurry for you, Nate?
Yeah, a little bit. I don't know why it does that.
We'll wait it out, but I'll just verbally talk to you guys. So I've been looking based on my trend lines. I've been seeing some where right now we're testing a couple more short-term trend lines. And we had a really big red candle. So we had an indecision candle, which was a little bit of, we don't know where the market's going. This indecision candle is going to really see the next day. Whatever candle happened that next day is probably going to tell us the short-term direction for the correction. And we saw a really big red candle. So that really big red candle is potentially telling us that more downside is headed. And so when I kind of, I'm assuming somewhere between a 5 to 7% correction, maybe up to 10 if things get really nasty. But when I kind of look at all the lines coming into the end of July, I'm seeing a pullback somewhere back to 405 to 415 range. That's the pullback. It's too blurry so you guys can't see what I'm looking at on the charts, but that's a range to keep an eye on for the SPY. Somewhere between 405 to 415 if we continue to see red candles come in.
So hit your alerts.
There's really, really big support around that. So the last big pullback that we had hit 405, and then the last pullback we had a couple weeks ago hit 415. And so those are going to be two really big supports, and it's probably going to choose one of those or in that range to pull back. On the daily chart, we have the 100-day moving average at around 410, so it's right in that range as well. And we have some really long-term trend lines showing that it's somewhere in that 405 to 415 range. So that's kind of what I'm looking for on the SPY. I think the screen is still blurry, which sucks, but when we look at the NASDAQ, we're way overbought when we compare the two. So the RSI on SPY got to about 70. The RSI on the QQQ got to almost 80, which 10 doesn't feel like a lot, but that's actually quite a bit. The last time RSI got that high, we had somewhere between a 6 and 13% pullback in the market. I still think unless something really crazy happens, like COVID shuts everything down again, I really don't think that we're going to have a massive pullback yet. There's been so much strength lately that I think that's going to, even though I still think we'll get, like I said, somewhere between a 5 and 10% correction, I think that it's going to not be as drastic as it could have because there's been so much bullish momentum yet, and I don't think that sentiment's gone yet. But for the QQQ, you still can't see my chart, but things to keep on your radar is I think somewhere between 345 to 335 is probably going to be the pullback range. And a couple reasons why is 342 was the last all-time high that we had recently before we broke out to the upside. So there's going to be a ton of support there. And then we have the 100-day moving average at 335. And so look over the next couple of weeks for those two support lines. And that's when I'm going to start considering buying into things, when I see it come back to those two spots for the SPY and the Qs. So I'm going to be looking at the Walgreens. I'll be looking at potentially Southwest. I might be even looking at like a Facebook or Apple to buy a little bit into. And some of my more speculative names I might buy into for a little bit of a push higher, like CHPY PT, which is ChargePoint. I think they might get a little boost, maybe a 10-20% move off this market correction. And then DM is one that's had a really big pullback, and that's one I'm going to be eyeing as well. PLTR actually is another one I'm going to be looking for a little bit of a squeeze higher into October. Again, maybe 10-20% as they pull back in the next couple months, I think a little bit more. Mm-hmm. So I think you're going to have a chance to load up on some things. So look for those price points in the charts as an area to start considering buying into some names.
Cool. Now you look at the pretty graph.
Now it's like, fuck, now that I like fucking feel my
went
guts.
through it all. Yeah.
But yeah, there's a 100-day, and then this is where we broke out before, which is around 442 or 342. So those are the two areas. I think the 50 days around there too, if I remember correctly. Yeah, the 50 day at 342 and the 100-day is at 333. So somewhere in that range, I think we're probably going to get a bottom. But that's all I'm going to share on the technical side. I think a couple other things that we had brought up. Obviously, we've already talked about code quite a bit, so I don't think we need to dive more into that. We talked about some stocks that we already want to buy into, so we kind of told you guys already that on the inflation.
So Jake had a really good question
that
I do want to discuss here. I'm going to minimize your screen a bit. How big of an impact have retail investors made on the market? So I just pulled up this Wall Street Journal article. In June, so-called retail investors bought nearly $20 billion of stocks and ETFs on a net basis. Yeah. So the highest it's been since at least 2014. So that's pretty interesting. And it outdid the first meme stock frenzy in January. So instead, individual investors have grown a number. More than 10 million new brokerage accounts have been created. I would say most of those have been through Robinhood. I can't remember what the stats were on that. Compound did a really good kind of breakdown of Robinhood about some of that, but pretty interesting numbers to see. This part here shows have fallen 28%. June Dogecoin has drawn 67% from its May record. So I'm curious to see what these retail investors, including us for that matter, are looking at repurposing our gains from. I would assume there's been some gains. There's people holding the bag, obviously. But it shows that a group is nearly 70% confident will keep rising over the next 3 months. So there is that. Investors piled in, for example, on electric makers, cannabis stocks. We've talked a little bit about cannabis. But yeah, I'd be curious to see what these folks do. This was July 5th. This article came out, so. But yeah, good question, Jake. I haven't actually looked into that a whole lot until recently myself. So, hey, Manna, good to see you pop in again. What up, Ma?
You missed some of the topics for coming in and out, but we're still talking.
Yeah.
So. But yeah, I think they're saying that we've seen the biggest in the history of retail investors. We've seen the biggest inflow of money from retail investors than any time in history. So it definitely have an impact.
Yeah.
I still have a bias that I think retail investors impact, but big money is really what dictates the market, and I still am that bias until maybe something crazy happens in the future, but it definitely had an impact. You can tell meme stocks, like, welcome back, man. Hi again.
Do you have anything, Manna, that you wanted to discuss? You just missed like the chunk of it all.
Yeah, we went through some really good topics, so
we laid bare pretty heavily. But that said, we'll post this back up on YouTube.
Yeah, this will be on YouTube.
Did a good hour segment here just talking about a bit of everything, inflation, kind of the macroeconomics of what's happening and why. I talked a little bit about wages and how that's affecting our economy and growth, and transportation. That's a big key component in some of the stocks that we've been looking at. So feel free to chart back on YouTube here in the next few days if you have a minute. So, but is there anything else we wanted to touch bases on? Massive traveling going on.
The only stock I forgot was Ford. I'm looking to buy up some Ford on the dip.
Oh yeah. I got some long call positions on this one.
I forgot.
22, 23, year 22, 23. Yeah, that's a good one.
I'm looking for 12 to 13 to buy in. I think it's going to pull back a little more.
That's your 12 to 13? I could agree with that, specifically because of these recalls that came through recently. So,
yeah, about 800,000. As a first-time investor, what stocks would you recommend Bitcoins? What do you mean by like companies that are in the crypto space?
That's a family member. No crypto for you. No crypto for you. No Bitcoin. Stay away from that. It's poison chalice. But yeah, Ford, the recalls are going to have probably I wouldn't say a severe or significant impact, maybe in the short term, but it's going to be the chips. If they can recoil from that and focus on the EV stuff, I think Ford's got it golden. Ford and GM are the American companies really looking at this. Tesla, for that matter, obviously. So.
I didn't sneak that in. That is comedy.
Yeah, but Ford, man, looking good. Look at this financial performance. I mean, beautiful numbers coming out.
They're expecting a little bit of. I made a video on it, so if you haven't watched it on Children Trades, go watch it. But they are expecting a little bit of decrease in profits this next quarter.
Yeah.
Earnings come out on the 29th, I think.
They're the ones who are asking the dealers to put in the chips, correct? That was a great video you did about that. So Tesla.
I'm not touching Tesla with the 12-yard stick.
Yeah, Tesla's pretty volatile, man. If Elon could keep his mouth shut, maybe he could stay off some stop these lawsuits from incurring. But the problem is you have all these subsidiary companies under these monolithic, like Tesla, Amazon, who have all these side projects, pet projects going on. I'm waiting for those to branch off and create their own, hopefully at some point, whether it's a reverse merger through a SPAC or if it's its own IPO. I could see SpaceX doing that. I could see Blue Origin doing that with Bezos. Virgin Galactic has already done that. Their ticker SPCE, that was the reverse merger they did with Chamath, who's chairman, obviously, of
buy Ford stock instead.
Yeah, focus on Ford. Ford and GM. GM's they're pretty bullish. They're looking at 2035. Correct me if I'm wrong, because I can't remember all the digits.
2035.
They're looking at going pretty deep.
35,
yeah, Ford, very similar endeavors.
2030 by 2030.
Yeah, we covered it last week. You folks can go back last week. We touched base on all that stuff, but we're bullish on that market in particular. China's pretty interesting, and we're not going to get into that whole thing. But China between Xpeng, yeah, that's a good one. But Xpeng, Dylan's been looking at this for quite a while now. We've been talking about it every week. It feels like so.
Rates going down. How much lower can they go?
Yeah, I mean, are we talking which rates? I'll say I closed on a house on an investment property. 4.625 was the rate that I got from an investment property, from a mortgage standpoint. But
and
yeah, how much?
Way lower if you bought like a bigger property too, probably.
Yeah,
wasn't that partly due to how small of a?
Yeah, in I mean, I went in at under 150K, so I mean that was small, minor risk though. 3.822. You got time, Jake. I got 3 active call options on Ford right now. One for the same call option that you just said, 3/18/22. I have one later that year, and then I have one January 23. Actually, I have 2 in 23. And as we start seeing the pullback occurring, in fact, let me pull up some call options since we're talking about it right now.
As Nate does that, I do also want to call out that if you are a sub, we are going to be giving you some exclusive insight into our trades coming up. We're going to be starting some perks for all subs, so please sub if you haven't already. We're going to be actually
Yeah.
giving you some of our trades.
So
Only
just
for
looking.
subs. So just call it out.
Yeah, only subs. We'll do some pretty good videos on this stuff. So I'm always
We have
looking
a
out.
YouTube. We have a video on our YouTube channel that you can look at buying options.
Yeah,
YouTube
Chunky, we covered
stock
that a few
talk
weeks ago.
game.
Yeah.
So you can go in there. It's a pretty good video. It's about a half an hour. We go through specific examples. I'll post it in the chat for you. But
In fact, maybe we'll talk about it tomorrow. Dill does free for all Sundays. I'll see if I could pop in for a little bit. Maybe we can go through some scenarios if you're on Chunky tomorrow. You have to sub and you have to be on tomorrow. That's the caveat. But briefly, just going over this one. So call options, strike prices. So what's it at? 1361. You're expecting it to drop to 13? Is that what I'm hearing? Dill?
Sorry?
Thank you for pacing.
yeah,
you
I think
expecting-
around 13 is somewhere between 12 and 13 is my range I'm looking to buy. You never know, but that's what I'm looking at.
Right. So assuming it's going to drop, right? I'm not going to talk delta, IV, implied volatility and stuff right now, but definitely if we see this drop to 13, I'm going to keep my eyes. I'm going to probably buy further call options on these. But the beauty here is I'm willing to invest. So this is $2.30 per share. Multiply that by 100. So $230 is what you're paying for premium. And that's to buy this, have the right to buy this at $15. I am very, 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 very bullish on this. If I'm going this far out, I think it will exceed $15 by 23 of January, assuming everything goes well. So
And
that's a good.
also, just to add on this, there's also been a lot of speculation about Ford bringing back their dividend. And if they bring back
good
any
point.
kind of dividend, that's going to bring a lot of buying pressure to the stock.
Very, very
So,
valid point. Yeah.
So
And
that's another topic I've been seeing a lot of chatter about online.
Yeah, dividends. And assuming all goes well, I would also assume they might do some share buybacks, who knows, down the road as well, to really get that going. So yeah, dividends are nice. You don't get the dividends though.
Not confirmed, but-
Speculation. We're starting the gossip right here. STG, real talk. Dividends may be coming back. Hashtag shout out to Jake. But yeah, I could see some mad opportunities happening here. I get some long-term plays. Definitely, people want the short-term gains, but I will tell you, Jake, dividends, we don't get those with the call options. You have to exercise those to get those. But B, long-term plays is the name of the game right now. I'm selling out a lot of my positions, my swing trades that I have, 3 months plays, selling out a lot of those. And then I'm looking at putting that into these longer call options at this point. The other play would be is if you want, you could buy, not going to get too technical here, buy some puts or sell some puts rather, at wherever you feel comfortable buying them back at, so you can get a premium, and then ultimately you'll have to purchase those at whatever strike price you put on. We could go through that some other day, but I think there's some alternatives depending what you want to do, collect a premium and pay if you're long, bullish on these down the road. So definitely some opportunities, I think, here.
Yeah, I think any strike price or any buy that you're expecting, I would say $17 is very, very attainable and easy for Ford to get to. Over 17 is going to be more challenging because there's like multi-years of resistance around $17, but I think anything at 17 or below right now is pretty easily attainable over the next year for Ford.
Agreed. So if it does continue going down, probably this week would be a good opportunity to snag up if they do decide to continue dropping. In fact, let's kind of see where they're at really quick.
Yeah, I think there's going to be a lot of pros for Ford over the next couple of years.
Yeah, they're trending
I
down
think
pretty
they're
hard
turning
though.
They're turning their business around quite a bit.
Yeah, absolutely. And we'll look at institutional investors and stuff. I know.
Yeah,
Bill's
they're down
been
a
looking
couple
at that.
bucks. They're down
Yeah.
like $2 or $3 from the high, but they went pretty parabolic for
Right.
not necessarily good reasons.
So should we end this on a Bezos note?
Yeah, let's do it. Yeah.
So the little tit for tat here that we have going on between Bezos,
Comedy,
Branson, Musk, Elon Musk.
Pure comedy.
So there were some words thrown specifically about. Well, Elon started it, I think, a few weeks back, where he says Bezos can't get it up. That was
Well,
kind
even
of a.
before that, let's first applaud Branson.
Yeah.
They're
True.
like,
True.
is he gonna make it to quote unquote space, even though it's not true space, but
Yeah.
space? So give him the clap.
Yeah.
Branson,
He
good
deserves
job.
it. He deserves
You're the
it.
first I don't even think he's a CEO.
First
anymore, but
astronaut.
The first owner. The first
Yeah.
owner to go into
And commercialized astronaut.
zero, whatever it's called. Yeah.
Yeah, it's zero gravity but there's suborbital space, and so there's this kind of cool chart here actually that explains this a little bit. Zoom into the blurriness of the graph here. I'm gonna hide your little graph there.
But do not buy SPCE stock. I'm not a financial advisor, but my educational advice perspective would be not to buy that stock.
Yeah. So it's interesting. So they're going roughly 50 miles up into the space. I think theoretically, or technically rather, it should be 62 miles up to be considered space, is what they say. But anyway, 100 kilometers up, they shoot up, they come down, and so they got a landing pad and capsule landing. So this is the plan for the Strat for the Bezos crew. He's looking at 6 passengers, I think, is what I've heard.
I think he did get out of his seat, Jake. I thought I saw another video of him floating around a little bit, but I could be wrong.
Yeah, but yeah, this fight going back and forth, it's pretty interesting. Musk obviously has it out for Bezos. I'm curious to see what that's all about.
Oh,
Maybe
they're
a little
battling, bro.
And then Bezos, or rather Musk, did take a picture with Branson, congratulated him on Twitter and so forth. But pretty interesting to see kind of this bro down, if you will, as they're going back and forth. This throwdown, bro down. But suborbital flights require less power. So I'm actually curious to see what they want to do with this. So 62 mile mark is what they have to do. They're getting above the 50 mile mark. But it literally takes like minutes. I think 11 minutes. Yeah, 11 minutes. And then caps off. So I could see this being commercialized and even quick flights to other areas, right? Maybe you fly up for 11 minutes, pop down, and you're like, I want to land in China. Maybe they got like a landing pad in China, and you just kind of float down, kind of like a parachute. So giant metal balloon. Yeah, you can hop onto a Starlink satellite as they launch that up. But just interesting nonetheless.
Yeah, I think he did. I thought I saw another video of him kind of
he
playing a little bit
floated.
But yeah, I saw another video when he was strapped in the whole time, so I'm not sure.
So Branson made it back. Chill Dill said pretty morbid stuff. Are they? Is he gonna make it back? That's the name of the game. Is he gonna make it back?
What if he doesn't?
What happens to the stock? Yeah. Well, it doesn't matter because he's not really there anymore, right? He's officially off.
Not CEO anymore.
So he'll be taking over Blue Origin. I'm curious to see what he does with it. Mad props to all these folks involved. Yeah, he's shooting some fire over there. But yeah, thanks for hopping on for this Saturday Real Talk.
Did you guys like this format, Jake and anybody else in the chat? We're trying to think like if this format's a little bit better, where we game for the first 45 minutes, let some people come in. It seems like people usually get on around 8 p.m. West Coast time-ish.
What up, Rice?
We're trying to stack instead of talking and doing game at the same time. We're just going to be talking about the stock stuff at once. So, do you like that format, Jake? You seem to be the only one chatting. So, anybody else in the chat, do you guys like this format better? I think we get a little bit more deep, and I think it's a little bit better. But curious your guys' thoughts.
Cool. Okay. A little more focused.
Yeah. I like it.
Oh, thank you, Chunky. Gotta say, if you have Amazon Prime, bam. Or if you want to pitch in $5. I like whatever makes you happy. Oh, Rice, you too nice. Throw some bits. Get some bat.
Got those video watching bits.
Yeah, bro. Yeah, we don't get those for free anymore. Watching advertisements, it's lame.
But yeah, as I mentioned, if you're a sub, we're setting up perks for you specifically. some how to invest trainings, some exclusive looks at the trades that we're making and at what prices. So subbing will give you benefits, and it's coming very soon.
Wow. Yeah. Interesting stuff on Twitter.
What is
It's all Elon Musk. Like, people are responding.
oh,
Damn, Rice. Thank
Yeah.
you, as always, man.
shit, right?
We owe
Very
ya.
nice of you, man.
So we're going to end this stream. We'll pop on to gaming, explicit
Yeah.
gaming right now.
If anybody
Exclusive
wants a game
gaming,
with
rather.
us,
Hit us up. I know some folks.
anybody have games they want us to play?
Some
Just
FIFA.
Rocket League or FIFA or something. We were killing in Rocket League the other day. Maybe we should keep that flow going.
Oh, we were that tourney. Oh, tourney's over.
You guys
but that
missed it on
tourney.
Wednesday.
We won the
We had a
tourney.
pretty nasty tournament win.
Yeah. But we can end it on that note. We are going to get some new sound bites. We're going to get some other stuff. So we're going to have a opening and closing bell for the end of this stream. I think. Maybe.
Yeah.
Mario. Get out of here, Ali. Get some Mario.
Hey, this ain't
Multiplayer.
1950.
Yeah, come on now. But that popular dodgeball game. Oh, the arcade one. I played it with my bro. It was okay. But get that bell going. Blast everybody's eardrums out. But definitely appreciate everybody, as always, coming through.
Yep. And if you're not sticking around, we'll be on tomorrow night doing charting free for all Sundays. So
Yeah.
join tomorrow if you're not going to hang around and watch us play video games and chat with us.
Yeah. So then this one, reboot it. Thank you all for hopping on. Check us out on YouTube as well. You can always go back. If you aren't on social media, following us,
Yeah,
please do.
I'll be posting these on YouTube, so you can watch back just the stock, the real talk. Is that what we called it? Shoot.
Yeah, the real talk. Yeah.
I'll be posting the real talk clips on YouTube, so you guys can
Smart
watch
talk,
it back
real
if
talk.
you need to. Because I know we covered a lot of stuff, so
Yeah, we did.
we'll have that on
Beautiful.
tomorrow.
This is officially episode 1. 00001.
Starting it over.